Hello, I'm Simon Wardle and welcome to the Velocity Money Talks webinar series. Velocity is a free program set up to help growing businesses benefit and do exactly that. This is one of a series of 5 programs that we've put together with the high street banks to help you answer everyday questions that are relevant to your business. With over 25 years in finance myself, I hope that we're going to get to grips with many of the issues that we hear you ask every single day. So we're here at Colworth Park in Bedfordshire, a centre of innovation and excellence in its own right. So why don't you come and join me and meet some of my guests. Today I'm joined by Alan Belcher and Jonathan Barrow of Natwest Bank, who between them can boast over 50 years experience in banking. And they've agreed and very kindly offered to come and talk to us today about the all-important topic of cash flow within the business. Gentlemen, welcome. Thank you for joining us.
Thank you.
Now, cash flow is a vital lifeblood to the business. It's what keeps the business healthy and ticking. And I know that you have 10 top tips that you consider to be really important. So would you like to start us off? Alan, number 1, please.
Yeah, thanks, Simon. You know, cash is the lifeblood of a business, and without cash, a business cannot exist. Lack of capital over a period of time can destroy a business, but lack of cash could destroy a business overnight. And generally, a business can absorb 2-3 years of loss making, but typically it will only run out of cash once. You've probably heard it said that turnover is vanity, profit is sanity, and cash is king. And it's true. And the level of turnover that a business may generate to a certain extent is irrelevant. Rather, it's the profit that it generates from the turnover that is key, and then subsequently the cash that it derives from that profit that is vital. And so our first tip and our overarching principle for this whole presentation is make cash your unrelenting focus. And whatever decision you make in your business, whether you're looking to launch a new product, whether you're looking to take on more staff, or whether you're looking to change your supplier, think about the impact of cash that will have to your business. And think about it before you make that decision, not afterwards.
An important thing, I think, right at the beginning of this, as we're talking about cash, a lot of businesses, a lot of people think about cash as being physical money, but what you're really referring to is money within the business is actually revenue.
Yes. Yes.
So it's most important that everybody understands that this topic is not about keeping cash as in pound notes and £5 notes in the business. This is actually about revenue. It is about liquid money that's available within your bank account.
It's certainly, yeah. And that, as we said, is the lifeblood of the business. Very, very important. Yeah.
So number 2 is one of the most important subjects that a business can get right from the outset. It is the foundation, it's the skeleton, it's the pillar around a business. We did cover it in an earlier presentation, but very briefly, would you like to explain why you think a cash flow forecast is so important to a business?
Cash flow is so important. The cash flow forecast is so important. And I think it's essential. It's not rocket science, really, a cash flow forecast, but it's essential, Simon, I think, for a new business as well as an established business. And by the way, irrespective of whether bank funding is required or not, it's so vital to have that understanding of when the timing of cash is to be received into the bank account against which you're paying your fixed overheads and your suppliers. Interestingly enough, a number of business owners feel quite uncomfortable with this whole concept of preparing a cash flow forecast. And if that's the case, then I'd recommend they seek advice from their professional advisors, from their accountants, from Velocity, dare I say even their banker. And Simon, I think it's important to say it's not wrong to seek advice, not wrong at all. In fact, I think that good, sound, professional, independent advice will be invaluable to a business, certainly at the outset, but also throughout the duration of their life.
It keeps you focused in the business.
It does keep you focused in the business. And one of the other things that you can look at when you're looking at a cash flow forecast is a sensitivity analysis, or what we call a what-if scenario. What if my turnover is rising by 5-10%? What if my customers say, we're not going to pay you for another 20 or 30 days? What's the impact to your cash flow? And once you've got that cash flow on a best endeavours basis, because it won't always be right, but on a best endeavours basis, then you can consider what options you've got available to you to maintain that operating cash flow within your business bank account.
Now you raise an interesting point there, and that is payment terms. Now I've run a business and I know how important payment terms are. And it's something that an awful lot of businesses don't give any credence to. They raise an invoice and one day they hope that the money comes in. But actually, negotiating your payment terms and getting it right can speed up the flow in the business. And would you agree that sometimes you're actually better doing a business transaction and almost maybe cutting your margins slightly sometimes to get the money in the business? But payment terms are something that so many businesses seem to be afraid to talk about.
You're absolutely right, and you really can't leave this stuff to chance. You know, as you said, you've done some of the hard work, you've made the product and you've sold it, but actually if you leave it to chance, you'll end up being the banker to your customers, and that just ties up cash in the business. So don't leave it to chance. You really have to get out there and take the opportunity to negotiate and make sure that you understand exactly the terms of trade that you're operating on. If you don't, cash flow problems are going to come fairly quickly, and you know, any contract that you look after, no matter how lucrative or what the margins might look like, you have to bear in mind the payment terms, because it will have such an impact on your cash flow when you're moving forward.
And so the next logical step of that, another great tip therefore, must be credit control.
Absolutely, and just getting the invoice out quickly. So yes, the credit control, but you know, further down than that, you have to get that invoice out quickly. Not rocket science, but if you don't get your invoice out, you're not going to get paid. So get that invoice out quickly and make sure that the terms are very clear for people receiving your invoice about what they need to do with it.
What's your view generally on what I call factoring, is also known as invoice discounting? Where, in your opinion, does that fit within your payment terms?
So again, once you've got to a point, you're looking at how you can release cash which might be trapped within the trading cycle of the business. Asset-based lending, stock financing, invoice discount, or even invoice factoring, where there's a credit control aspect to it, are involved, can all really help you unlock cash from within that trading cycle within the business. They work really well. You pledge the assets that are, you know, within the trading cycle as security, but they can just accelerate that cycle and get that cash back into your business where you can use it more effectively.
And this might seem absolutely obvious, but I see it. We get invoices come in, there's no bank account details, there's no sort code, there's no payment terms, and so many businesses just put in an invoice and I think they're going to get paid on some sort of wing and a prayer, and it doesn't work like that. But we're all in internet and online banking these days.
Yeah.
What's your view in terms of rigid formats for invoicing and making sure you get paid?
Yeah, it's a great point really, Simon. I think, you know, we talked about agreeing in payment terms, we talked about invoicing quickly, and you know, our fifth tip is about ease of payment. Let's make it easy for our customers to pay us as business owners. So three quick things really on that, I think. When you send your invoice out, put your banking details on there, so that if a customer wants to pay you electronically, they can do so without delay or problem. Secondly, you could send out a stamped addressed envelope with the invoice. There are people who would like to pay in the old-fashioned way, by way of cheque, which is fine, so that helps as well. And thirdly, really make sure that you've got on there the ability to accept credit card payments, either over the phone or face-to-face. We've done the hard work, haven't we? We've sold the product, we've agreed terms, we've sent the invoice. Let's not put barriers or obstacles in the way, and let's make it easy for customers to pay us.
So your next tip, I know, was what you call unlocking cash. What do you mean by that? Would you like to explain that to us?
So sure, so depending on what the nature of your business is, obviously as you grow, the terms of trade that you may have agreed can actually be cash consumptive within the business. So unlocking the cash by using some external funding solutions, which we talked a little bit about, asset-based lending, stock financing and invoice discounting, just really useful ways of unlocking the business, unlocking the cash that is trapped in that trading cycle. So those are things which your bank would be more than happy to talk to you about. It's quite an interesting question as well. Your bank should be taking the time to talk to you about this stuff. They should be taking the time to understand your business, your working capital cycle, your funding cycle, so that they can give you the best possible solution for you and your business. And if they're not doing that, you should really be challenging them to do so, or go and get a second opinion from somewhere else.
So really what you're saying is a good relationship and an open relationship with your bank is really highly vital.
Absolutely critical. And but understand that requires investment on both sides. We will need to understand the business, so please share that with your bank, because it's a critical piece of understanding to being able to give appropriate funding solutions.
So you've got your business ticking along, but of course you need to keep it moving, and that's now all about growing your business and attracting new customers. And there is this 80-20 rule. One part of that rule says that 80% of what you do comes from 20% of all of your effort, and the other rule is that 80% of your business comes from 20% of your clients, and therefore it's very easy to rely on your base of your clients. What's your view in terms of growing your business and forward looking and getting new clients?
Well, it's a good question really, Simon, and it reverts back a little bit to that cash flow forecast and making sure that you've got cash within your business to invest in marketing and to get the right advice about doing that. And growth in a business can be vital, and it's understanding the cash implications of that. I think it's a really, really relevant area. And most, if not everyone watching this today, will, as business owners, will have a strong aspiration for growth in their business and will mark an increase in sales as a measure of success. It's fantastic, isn't it? You're running your business and you've got that demand. You're busy. You're getting sales requests day after day after day, an inquiry to sell your goods, and that's fantastic. Your turnover's growing, but it's just as important to understand the cash implications of such growth. Most businesses that we deal with and we face are what we call cash negative, and by that we mean that they will have to pay their suppliers ahead of receiving or manufacturing their goods and selling those goods and receiving the cash. And the importance of understanding that is that there will be probably a working capital requirement as a result. We do a little calculation as bankers and accountants, and we look at the debtor days, the stock days, and the creditor days, and we call that the funding gap. Sounds complicated, but it's not really. And put simply, it means this: if a business is cash negative, then any growth seen to that business the cash will need to be funded either by way of retained cash already within the business or by way of a funding solution. Ironically, if a business is plateaued or turnover is fairly flat, then ordinarily cash should be fine. It's a really common area for some of the businesses that we have. It can be quite frustrating. Turnover is going through the roof. It's exciting times for the business, and yet they're struggling to find that funding solution. And that's something that we as bankers can help with.
So what you're actually saying is that over-trading, getting too much business, can be as difficult or as dangerous as not having enough business.
Exactly. And the concept of this is really to just understand the cash implications of business growth.
So every business, large and small, has a different funding cycle and a different cash requirement. I know you've created a diagram to try and explain this a little bit clearer. Would you just like to briefly explain it?
Yeah, sure. So there is a diagram which really is just the working capital cycle, and that is what it is, the flow of cash within your business. If the cash is not flowing, then there could be a problem. And it's just understanding that working capital cycle for your particular business. And we haven't got time to talk about it now, as you say, but please speak to your accountant or your banker. They'll be more than happy to talk to you about it. And it's important to understand where your business is in terms of that working capital cycle, whether you're a retailer or a haulier or whatever. There are different aspects to consider in terms of the working capital cycle.
That actually quite neatly leads us on to your suppliers, because you said in that conversation just then that very often your suppliers will need paying before you get paid.
Yeah.
The more business that you do with suppliers, the more they trust you. and therefore you're more likely to get terms that are advantageous. But equally, there'll be other suppliers where you can get better prices, wholesale prices to buy.
Yeah.
What's the trade-off of this?
Yeah, again, interesting point, and I think a change in supply, there can be a very real impact to the cash of a business. Let's use a fictitious example by way of illustration. You've got a business that's established in the SME channel, trading well. It's got a long trusted partnership with one of its suppliers, 90 days credit, everything's going well. But you're aware that over a period of time the price of raw materials is increasing and the cost of goods is rising. You know your market well enough, and you know that the market and the customers won't entertain a price increase. You're also aware that one of your competitors is sourcing the product at a cheaper price and is starting to take market share away from you. You need to do something as a business owner. What do? So you find an alternative supplier, and they can source the product for you and provide the product at a cheaper price, but it takes longer to arrive. And because it's a new relationship, they want paying up front or say within 30 days. So you've got this conundrum really, you've got this fantastic situation where you've now renegotiated your supplier terms. You're likely to be able to increase your turnover, you're likely to be able to increase your profit, take market share. The other side of the coin is there's a very real impact to the cash position because you need to pay those supplier payments earlier. And again, it's a very common problem that we see and challenge that we see with businesses in the SME channel. And again, something that we can help with as bankers.
But this comes back to your cash flow forecast and reassessing your
Absolutely.
forecast as an ongoing basis. Your forecast isn't a one-off
No,
piece.
it's a living document within the business, and you have to keep going back to it all the time to make sure it's alive with the current information and any material changes, particularly to suppliers and how you're going to fund those growth. And it's much that it's just been about aware of the change. So is one of those situations better than the other? Well, probably in the long term, having that cheaper input price is better, but you just have to be aware about how you're going to fund it and make sure you've asked enough questions of all of the people around your business to make sure that you know how you're going to do that.
And that leads me neatly on really to 9 and 10. A business is nothing without the people who work in it. Yeah, they are the business, or they should be the business. And that's people, I know you call them people within and people without, which is quite an interesting phrase, but let's start with the people within.
Sure.
You know, key roles within the business. How getting committed employees within your business. Talk to us about that.
Yeah, so there's a number of key roles, but I mean, this stuff is relevant whether you're a startup business or a medium-sized or a long-established business. Having these key people within your business is critical, and making sure you understand the amount of discretion people have got and the kind of controls you've got in place around this to make sure that it's not having an adverse impact on your cash. So salesmen, how much negotiation discretion do you give them? Are they chasing sales at the expense of margin? Are they impacting on the terms of trade in the negotiations? Is your stock buyer doing the same thing? Is he overstocking the business in exchange for a cheaper price? Does your products arrive on time? Do you need to think about that? So there are lots and lots of people in that early part of the trade cycle which are really critical. But you mentioned the other one that's really important and which we see ignored quite a lot, which is the credit person within your business. How are you chasing the invoices when they go out? What are you doing about them if they're not paid on time? And I understand that as a small business, most of these roles are actually done by the owner. But actually, as you grow your business and you're starting to have enough resources to employ additional people, we'd urge you to really give that role some serious consideration. It will help professionalize your business, but also help drive cash flow as you're growing, which is a really important piece of this.
And there's quite a lot of business help out there for companies who will chase debts for you. They will try and bring, help you get your debtor days in and so on and so forth. My view always on these things is don't be afraid to go outside. Stick to what you do well.
Absolutely.
And use an expert for outside help. Which leads us very neatly on to number 10, which is people without. So that is all about expert help for your business, is it not?
I think absolutely, and being able to understand where the gaps in your own knowledge or experience are, or even where the limitations on your time are, and going out and making sure that you plug all of those gaps with some really capable people around, or as we said, without your business. These are not your employees, but these are people you need to go and engage with to make sure that you are getting the right kind of support, and in the case of your lawyers and accountants, advice around some of these key issues. And again, this is critical stuff. If you're not getting the right kind of support and challenge from some of these people, you're not really getting the best support that you need for the business. And if you're not getting it, go and get it from somewhere else.
And it keeps you focused on your business.
Correct.
Keeps your eye on the ball.
Yeah, because it allows you to focus on what you do best, which is start the business and really understand your customers, and wrapping the expert advice around the other bits of your business is really important.
Gentlemen, 10 top tips, which are going to come up on the screen again, I believe, at the end of this. And we thank you very much. It is absolutely, we said at the beginning, the lifeblood of the business. So thank you very much indeed for joining us, and it's been a pleasure to talk to you both. Thank you very much.
Thank you.
So that concludes this particular subject, and remember that this is just one of 5, so be sure to follow us on our other topics. There will now be a live chat open for around 15 minutes if you'd like to contact our panel of experts, or join us on social media or via email using the links shown on the screen below. Our thanks again to Colworth Park for hosting us, and remember that Velocity is here to deliver all manner of business help, from free workshops right the way through to one-to-one advice for all SMEs and social enterprises. Thanks again for watching and engaging with us, and we look forward to talking with you all again very soon. Goodbye.